But given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000. It has been, and we've seen it this week. These pullbacks get bought, so we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Hello, everyone. Tom Lee just dropped something on CNBC that we really need to pay attention to. Like, seriously, we need to wrap our heads around what's actually happening in these markets right now and get ready for what's about to hit us. Because here's the thing, I really don't think most retail investors have any clue what's coming down the pipeline for these markets, especially crypto. Whatever stocks do, whatever commodities do, crypto takes it and cranks it up to 11, right? That's literally the whole pitch for crypto. This market moves faster and bigger than anything else out there. But here's what people forget. That same wild volatility, it cuts both ways. Friday's bloodbath was genuinely one of the biggest crypto sell-offs we've ever seen. And right now, the reality is we're probably going to see this choppy price action continue for a bit longer before things actually stabilize and recover. Just look at where we are. Bitcoin's sitting around $111,000, Ethereum's still stuck under $4,000, XRP's hanging out below $2.50. Pretty much everything across the board is bleeding red, even just looking at the last 24 hours. Take SNX, that DeFi project is down over 20% in just one day. Most altcoins are getting hammered anywhere from 3 to 6%, some even pushing past 10% down. We're basically in this ongoing chop fest with altcoins right now, and it's all because Bitcoin hasn't fully bounced back yet. Let me tell you what's really going on behind the scenes here, because this is wild. We just saw over $250 million get absolutely demolished in liquidations in just 4 hours. 4 hours, and $212.5 million of that, all from people who were long. And the timing? Chef's kiss for the market makers. This all went down right when Bitcoin smacked into major resistance. Now, if you've been tuning into my recent videos, you already know I called this. It's the same story every single time. People see Bitcoin climbing and they think, oh, this is my moment to long it right at resistance. And then boom, one tiny dip and they're completely wrecked. Gone. And here's where it gets worse. All those liquidations don't just disappear quietly. They create this domino effect that hammers the market down even further. It's brutal. This is why I sound like a broken record about leverage trading. Just don't do it. Look, these market makers and exchanges, half of them are operating in the Wild West with zero regulation. They can literally see your positions, they know where your stop losses are, and they will hunt you down like it's a sport. I've done whole videos on this before about how shady some of these exchanges are. They're literally making bank every time you get liquidated. Your loss is their gain. Plain and simple. Listen, I'm going to be straight with you about this whole leverage trading thing in crypto. Just don't do it. Seriously, if you stick with buying spot, your odds of actually making it in this space go way up. And here's what really gets under my skin. You've got all these influencers out here shouting, hey everybody, load up on those leverage positions. Meanwhile, the people listening, most of them have zero trading experience whatsoever. They've got no clue how leverage actually functions. They're sitting there thinking it's some kind of magic button to get rich overnight, and then what happens? Bam! Their whole portfolio gets wiped out in one move. So look, I'm saying it again because it matters. Stay away from leverage trading, period. What's happening in the market right this second? If you look at the daily charts, it's a bloodbath across the board today. XRP just got smacked down over 5%. XLM, yeah, same story, down 5%. H-bars sitting at 3% in the red. Now, don't get me wrong, this isn't some apocalyptic crash we're witnessing here, but flip over to the weekly view real quick, and you'll notice we're still stuck in pretty ugly territory for most of these altcoins. Basically, we're all just holding our breath, waiting for that massive relief bounce to finally show up. And in the middle of all this chaos, check out what Bitcoin's actually doing on the daily right now. When I'm breaking down Bitcoin's chart, my eyes go straight to the RSI first. That's my main indicator. What I'm hoping to see is us staying locked into this beautiful uptrend we've been riding since September rolled around. Same exact thing applies to the price movement itself. So far, knock on wood, we've been protecting this uptrend on the daily time frame beautifully. Not a single daily close below it yet. Man, I really hope we can keep that streak alive. And then on top of all that, we absolutely need to defend these major support zones. I'm talking about that 113.4K level right here. Oh, and see this resistance sitting up top? That's what I've been pointing out to you guys. 115.4K is the level we need to crack through. So many traders are piling into longs right in that zone, completely missing the fact that, hey, this whole area, pure resistance. Then suddenly, bam, we get smacked down from that resistance and everybody's getting liquidated left and right. Look, we got to break through some of these critical levels first. We need actual confirmation that we've truly hit the bottom here. Once we get that, then we can start climbing back up toward those highs we saw at the start of the month. Now here's the thing. Today is huge because Fed Chair Powell is about to speak in just 20 minutes. This video goes live at noon, right? So literally 20 minutes after I hit upload, we're getting this major update from the Fed covering a bunch of stuff. They're talking about economic outlook and monetary policy. Everyone's buzzing about Fed rate cut decisions and what Powell's going to say about all that. Here's what I think though. When we look at the Fed rate cut decision, we're sitting at a 96.7% probability of a cut happening on the 29th. We're talking 15 days away from this thing. I honestly believe we're going to see another rate cut happen. But here's the catch. The one massive hurdle I see with the Fed slashing rates right now is that Jerome Powell has basically been weaponizing the whole trade war and tariff drama as his backup plan for justifying why rates should stay put. And right this second, with all the chaos unfolding between China and the US, well, that's literally handing him the perfect excuse to just walk up and say, hey, surprise everyone, I'm holding off on cutting interest rates. We're keeping things frozen right here. So I'm genuinely hyped for this crucial speech from Jerome Powell because there's a really good chance we're about to get some massive clarity around the rate cut situation. But the reason everyone's laser focused on this is because we've got mountains of data staring us right in the face to work with because the economy continues showing resilience with impressive third quarter GDP numbers and unemployment locked in at 4.3%, even though threats from incoming tariffs and a cooling labor market are definitely hanging around. Markets, everything from stocks to cryptocurrencies, are desperately waiting for clues about interest rate cuts with a 97% likelihood of a 25 basis point slice at the October 29th and 30th meeting. So look, I'm putting my money on a 25 basis point cut here, and it really hinges on a few different things. The big question mark, by the time we hit the 29th, are we actually going to get some real movement on this whole US-China thing? Your guess is as good as mine at this point. But even if that stays quiet, do I still think the Fed's going to pull the trigger on a rate cut? Yeah, I really do. Because if you think about it, this whole setup feels a lot like what we saw play out in 2024. Remember when they dropped rates 3 times in a row just to wrap up the year? That's the vibe I'm getting right now. So here's what I'm watching for. A cut happening on the 29th, followed by another one on December 10th. Now let's talk about what's happening with stocks real quick. We're sitting at around 6,620 right now, which honestly isn't that far off from where we bottomed out, right? Sure, we got this pretty aggressive spike happening here, but check this out. We've already touched the bottom multiple times based on these wicks. There's one that takes us back to September 17th, and then you've got this other low from Friday sitting right here. I'm looking at the 4-hour chart right now. And there's a chance we're actually building out a double bottom formation on the S&P. But I got to be honest with you, I need to see how this plays out a little more before I commit to that idea. I really want to see us smash through those recent highs we hit, reclaiming that 66.57 level. That would be massive for this chart. But honestly, what I'm really watching for is us flipping those highs from late September. We're talking about 66.96, or let's just round it up to 6,700. That's the signal I'm waiting for. That's when we'll know we're about to push way higher and retest that all-time high. Sure, Breaking these current levels would be a solid start, but that September high is what I'm laser focused on. Right now though, I'm not seeing enough from the S&P to make me confident it's going to flip those critical levels. We need a bit more action first, but here's where it gets interesting. Tom Lee thinks the S&P can hit at least 7,000 this year. And look, we've only got 2 months left in 2025. That means the S&P would need to go on an absolute monster rally. And if that happens, crypto's coming along for the ride. You need to see this. Scott Milker posted this over on X. Here's what Tom Lee's saying. Listen to this.
It does take us to our talk of the tape. The rally's road ahead. I mentioned that call from Tom Lee. He does join us now. He's a CNBC contributor. It's good to have you back. Welcome.
Great to see you, Scott.
So what do you make of just how the market's trading today? We've had a nice run. It's given a little bit back. Maybe some concerns are out there about the strength of the economy, the labor market, some other stuff. What do you see?
Well, I think markets are trying to balance a few things because we are navigating a little blind because of the government shutdown. But we also know that the real powerful driver of the equity market and the economy has been AI, which is not affected by this slowdown. So I think stocks are in this sort of zigzag pattern, but given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000, it has been, and we've seen it this week. These pullbacks get bought, so we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Are we whistling past the graveyard, Tom, on anything that could be concerning to you? I see a story right in front of me from Axios mentioning a Moody's analysis. 22 states are in recession or close to it. There was that Carlisle independent survey the other day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from the U.S. AI bubble. You mentioned the shutdown. Are we complacent towards any significant risks that we might be missing?
Well, I do think markets are less skeptical than they were in April and even in August and September, and we can see this in both positioning and AAII. So I think it is fair to say that the markets have priced in more good news. So like the things you flagged can be worrisome. But what I'd point out is that I think the AI story is actually strengthening, Scott. From our conversations with both companies and investors, it actually seems like the payback for AI, whether it's applications or services or companies' actual ROI, actually has improved in the last quarter or so. So I think that's what's helping actually create demand for spending. So I think we may be underestimating the sort of profit creation coming from AI. And I think that's why there's still legs to that story. But you're right. On balance, the data is mixed, and we don't really know because we don't have government data.
Yeah. You gave our producers this line that you still think it's the, quote, most hated rally. And I've asked you about this every time you've been on with me. I feel like now that's a little bit far-fetched to suggest that this is still the most hated rally. I don't find anybody who comes on, certainly not on the programs that I do, that is overly negative about anything. The prevailing view, even from those who were cautious before, are like the stock market's going higher. Now, it may end poorly way down the road, but it's going higher. So how can you suggest that it's still so hated?
Well, there's this thing where people can make like a backhanded compliment. Like they might say something positive about the market, but they're really bearish, because when I hear people say, oh, well, this reminds me of 1999, or, they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And I think, for me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
I'm totally with Tom Lee on this one. Right now, so many people are stuck in this weird limbo where they can't decide if they should be bullish or bearish, and pretty much everyone in crypto is saying the same thing. Alt season's dead, this market's done, we've hit the top, nothing's moving, so I'm going bearish. But I've got this strong feeling we're about to see these markets bounce back harder than any major push we've seen in the past 3 years. And here's the wild part. Almost everyone's going to hate this next big rally when it happens. Think about what's going on right now. This next wave in crypto and stocks in every market, it's going to be the biggest one yet. And that will eventually lead to the top, no question. But here's the problem. So many people are going to be sitting on the sidelines watching it happen, then FOMO in right near the peak and gets absolutely demolished. These markets feed on emotion. That's what they do. And lately, people have been incredibly emotional because markets have been ripping to the upside like crazy. Everybody's got stars in their eyes thinking prices are just going to keep shooting up forever. So what do? They start panic buying everything in sight, no questions asked. Then Friday rolls around and bam, total wipeout. Like getting hit by a truck you never saw coming, all that hype, all that excitement, it just evaporates into thin air. The whole vibe shifts from we're going to the moon to we're all doomed. Now everyone's throwing in the towel like, yep, that's it for me. I'm tapping out. This is obviously the peak. They're convinced it's about to get ugly, just like when we kicked off the year with that whole tariff mess heating up all over again. But look, here's what gets me. There are literally armies of people just watching from the sidelines right now. Tons of folks are stuck in this doom and gloom mentality, and they're gonna get caught completely flat-footed when the next surge rolls through. And trust me, this next one's gonna dwarf everything we've seen. Meanwhile, check this out. Most of these projects, these OG coins like XRP that's chilling at $2.40, they're already sitting pretty high up there. But when this monster wave crashes in, we could see a lot of these veterans, XRP and the crew, absolutely explode. We're talking 5 times higher from where they are today. And listen, that's already a wild prediction at these price levels, right? But honestly, I might even be lowballing it. It could go way higher than that. I just think there are way too many people who aren't nearly bullish enough right now after watching this brutal crash unfold right in front of us. This whole thing honestly reminds me of the FTX collapse and even the COVID crash. We all remember what happened after those 2 disasters, don't we? Massive rebounds that nobody saw coming. Yeah, that's what I wanted to share with you today. I really hope you got something out of this video. If you did, smash that like button, hit subscribe, and turn on those notifications so you don't miss any of the free content coming your way. I appreciate you watching. Catch you in the next one.